It's been another rate slashing week in the mortgage world, with many lenders trimming their rates. But is it a sign of better deals, or just the calm before another storm? This week saw reductions across the board, from Barclays to Halifax, Coventry to BM Solutions, and even Virgin have been teasing a drop in their rates too. Swap rates continue to fall, which is good news. But as always, what goes down can very quickly bounce right back up again. Plus, we've seen some big shifts in lending criteria from Nationwide, Gen H, and Aldermore, and they could make a very big difference if you're buying anytime soon. So let's start with rates. We've seen a flurry of fixed rate reductions this week. Barclays, TSB, Halifax, and Fleet all made minor cuts. BM Solutions went further, trimming almost 0.25% off some of their rates. Coventry dropped all their fixed rates, and Skipton and Virgin are also following suit. Even the Bank of Ireland are easing off on their buy-to-let and product transfer pricing. Now, these aren't massive drops, but the volume of lenders reducing does tell a story. Could this be the start of a summer price war, or is it just a temporary dip while swap rates are more favourable? Moving on to criteria changes, and there is a lot happening here. So Gen H have just launched the first phase of their new interest-only mortgage range. It's aimed at self-employed and young professionals. You'll need a household income of at least £50,000 and you can borrow up to 80% loan to value. It's ideal if you'd rather prioritise pension savings or investing elsewhere, with the flexibility to overpay as your income grows. Phases 2 and 3 will follow later in the year. As always, it's very important to point out that borrowing on an interest-only basis does carry severe risks, and if this is something that you're considering doing, it's very advisable that you speak to a broker and receive proper tailored advice that will match your own individual circumstances. Moving on, Aldermore have improved affordability for HMO lending, tweaking their ICR calculation and raising their loan limits up to 1.5 million at 75% loan to value and 2 million at 65% loan to value. This opens up the doors for larger scale investors. Now, an interesting one from Nationwide. They are now offering up to 95% loan to value on new build homes and 85% on new build flats. That's a big move, but to add to that, they've also extended their offer validity period on new builds from 6 months to 9 months, which gives buyers a bit more breathing room, because in the past, offers being valid for 6 months has often meant that we've had to get revised offers issued. So this is great news if you're buying off plan or you're waiting for completion, but I'd like to hear your thoughts on whether or not you think lending at 95% on new build properties, especially houses, is sensible, considering that new build properties in some cases can be a little bit overpriced and they very quickly see price reductions. So what are your thoughts? And finally, let's take a look at the wider economic picture. So swap rates, the behind the scenes pricing mechanism that drives fixed rate mortgages, have continued to fall, and that's why we're seeing lenders cutting their rates. But let's not get carried away, because we have seen this before. A few weeks of calm followed by a sharp spike. So if you're in the mortgage market right now, it's advisable to lock in a rate while you can, and if rates drop further, a good broker will move you over to those new lower rates. So what does all this mean for you? Well, if you're a first-time buyer, a home mover, or even a landlord, there's a window of opportunity. Rates are softening, criteria is easing, and products are improving. But the market is still very sensitive. If inflation creeps back up, or if the Bank of England get twitchy, these reductions that we're seeing could reverse just as fast. Tell me, are you thinking of buying this year, or are you waiting and hoping for more rate cuts? I'd love to hear from you, so please tell me, what's your plan? Also, are you looking to move this year, or are you playing the waiting game? And if you're a landlord, do these HMO changes make a difference to your investment strategy? Please do drop your thoughts in the comments. And if this update has helped you, please give it a like, consider subscribing to the channel so you don't miss next week's update, and share the video with somebody who you think might be interested. I'm tracking every rate change and lender move so you don't have to. I'll see you next week.